Choosing a business structure is an important step when you're starting up a business. Each business structure has the advantage and disadvantage. Which is the best business structures for your business? There are 4 types of business structures that you can choose from. They have formal structures and informal structures. So for informal structure is sole trader and partnership. The formal structure is for company and trust. It is very important that you choose the right business structures, because if you have the correct business structures, then you will receive the following benefits. The first one, assets protection, is very important because it will protect your personal and business assets. Secondly is tax reductions. If you're having a correct business structure, this will give you more flexible tax outcome. You can minimize your tax, and your tax will be reduced as much as legally as possible. The third benefits having the correct business structure is the flexibilities. If you have that flexibilities, you will receive the best possible options. Say you got someone want to join your business in the future, or if you want to closing down your business in a way that it would not affect your personal assets. Please keep in mind that this is not a personal advice. Any advice that I'm given here is just general in nature and it's intended for information purpose only. In this video, I'm just going to explain to you different structures to help you to understand each type of different structures, the advantage and disadvantage. So this may help you to decide which is right for you. For any personal advice, please consult with an accountant, or you can contact us at TMS, and I got the details here. For business structure, there's 2 categories. There's one informal business structure, there's formal business structure. For informal business structure is sole trader and partnership. And for formal business structure is company and trust. Informal business structure is very simple to set it up because it's formal. People normally, when they first start up the business and they don't want to spend too much money yet, and they're not sure whether the business that they're operating is going to be good or not. So it's a great way of testing whether the business will work. So people will set it up as a sole trader, or if you going into partners, joining with your friends or your spouse or your relative, you can set it up as a partnership. It's a very simple and easy way to set it up. It only requires a very minimum compliance requirement. As what I say, it's very low cost. Normally with this 2 structure, you just need to register a business name and open up a bank account, and then you can start the business. For tax requirement for sole trader, because you're already using your individual name, you already got your individual tax file number, so there's no need to go and apply for tax file number for sole trader. But if you set it up as a partnership, you do need a partnership's tax file number. If you are running a business, you must apply for the Australian business number, the ABN. If your turnover is over 75,000, you need to register for GST, and that's the requirement. So you also can get the capital gains tax discount as well as a sole trader. You have total control of the business. For partnership, but one of the advantages there for partnership is if you go in partner with another person, whatever the profit, you split it into the percentage that you agree on. You can get that income splitting, and you can also get the capital gains tax at the partners level. So it's a great way for testing a business in a very low cost environment. This will allow you to see if the business will be successful before you commit to too much time and cost. The biggest disadvantage of having this informal business structure is the assets protections. For sole trader or partnership, there's no assets protection. What this means is if someone trying to sue you, or if you default on a business loan, or you owe money to the creditor, you will be personally liable for all these debts and liabilities of your business. Your house, your car, and your personal saving are at risk because there's no separations assets between the business and personal assets. So if your business fell, you might lose all your personal assets as well. Assets protection is very important. If your business is growing, you start to have more customers, and some of the customers you might not know them personally, and if you done something wrong and they might sue your business, all your personal assets are at risk, all the hard work that you might have, a property, house, home, whatever, it can be all gone. Another disadvantage is there's no flexibility, because the higher the income that you earn, the more tax that you need to pay, and the tax rate can get up to 47% for sole trader. Same as partnership. Partnership doesn't pay tax, but then when the partnership makes profit, split it out to the partners need to go and pay the tax at marginal rate, which can be up to 47%. Tax planning flexibility is very minimum. Another disadvantage is there's no flexibility. That just like what I just mentioned, that because there's no separations between the business assets and your personal assets. Formal business structures, we have company and trust. A company is a separate legal entity. It's got the directors managing the company and also the shareholder. Company is responsible for its own debts. There is the assets protections there because there's a separations between the business assets and the personal assets. So what this means is that the personal assets of the shareholders are protected. So should the company owes the debt, as long as if you're acting as a director and you don't trade when the company is insolvent, then you're not going to be liable for the company's debts. It's got the strong assets protection, it's limited liability, and it's also flexible in distributions of income. It can also accumulate the profit. The profit can reinvest back as a working capital. And the other thing is for the tax. The tax rate is only 25% if you are the base rate company. That means like the company is trading and is receiving trading income. But if it's only receiving passive income, then it's going to be 30%. The other thing is the company is never die. For assets protections, if you're operating as a company, yes, you got assets protection. You got tax flexibilities, the reductions, because it's only 25% tax rate. And it's also flexibility as well. And when I say here yes and no, is compared to the trust is still better than the company in a way for flexibility, because company, when they're selling the assets, they don't get the 50% capital gains discount, whereas if you're setting up as a trust, you can get that capital gains tax discount. So disadvantage of having a company is that you have to pay a setup cost, but that's only one off to set up the company, and every year you have to pay the ASIC fee. The other disadvantage is the directors can be potentially liable if they are negligent or if they're insolvent trading. If the company makes the losses can only carry forward to the future year to offset against the future income, and it cannot access the 50% capital gains discount. So what is a trust? Just imagine that the trust is just like a truck. The trucks will carry the goods, and then the truck needs to have a driver. The trust, it's very similar. Just imagine that the truck is carry the business or the cash or the property or the shares on behalf of the beneficiary. Truck driver is just like a trustee. It's looking after all these goods on behalf of the beneficiary. Just talking in terms of trust here, how the trust set up is normally we will set up a corporate trustee, because that will give a better assets protections, and we have a settler to set up the trust. Then you have an appointor. Appointor is a very important person. If the trustee doesn't behave, if the trustee is not good, appointor can change the trustee. All the profits that earned from the trust, capital or profit earned by the trust, it needs to distribute out to all to the beneficiaries. The greatest advantage of a trust is privacy. It's very hard to find out who owns that trust, which in some cases it's good because you don't want people to know about your business or what property that you own. To keep it privacy, it's better that we're setting up the trustee as a company. Trust can provide a very good assets protection because it doesn't own by you, but you are controlling it. Trust can protect your family assets from any other potential threats such as bankruptcy. Really a good firewall between your personal assets and your business assets. And the flexibility is really good too, because you can distribute the profit as per the trustee's discretions. Really good for tax planning. As you can see, if you set up the right structure, you can get these benefits, assets protections, minimizing your tax, and also have the flexibilities. If your goal and objective is to protect your assets, to minimize your tax, and have that flexibilities, then it's very important to choose the right structure. Even though it is 4 structures, we normally will mix and match. What I mean by that is when we set up a company, we have to choose the right shareholders. And when you set up a trust, you have to have the right beneficiaries. If you got the correct business structures, you will receive these benefits, assets protections, tax reductions, minimize your tax, and the flexibilities. What we do in TMS CCA is that we can help you to find out what is your best business structure for you. And what we need to do is that we need to understand your current structures, needs, and objectives, because everybody is different. There's no one size fits all. Your circumstances is different from other people. And we need to consider and research, and then we have to compare all the available business structures options for you. Then we will prepare a business structure advice report for you, which is include our recommendations and explaining why we're recommending that structure for you and the action plan for creation of the business structure for you. And also we will draw up the diagram of your optimal business structure. After we get the report, we will meet with you to discuss and answer any questions that you may have. So what I need you to do, the next step, is that if you're interested for us to help you, then you can go into our website tmsfinancial.com.au, and then you can fill out one of these forms, which is you click on for small business, and then there's business structures and assets protections. In here, you just have to answer all these questions, then the form will get to us and we will review your form. The service fee that we charge is $220, but what it means, like fee that you pay if you decide to go ahead of setting up the structures with us, then that will become like a credit to the setup cost. So it doesn't really cost you anything. We need that commitment first. It's got a lot of works to work on before we can recommend to you which structures that it's best for you. If you are interested, please go ahead and do that. And if you have any questions, please feel free to write to me. And thank you for watching my video.